Good morning, all. CamelbackTrading.org coming to you this Monday morning, September 14th, and we are looking at the market profile of the SPY ETF here on Window Trader. And right now, with about an hour 15 prior to the opening, we are attempting to gap higher. We're almost halfway through the month. We've only had one gap this month. This would only make the second gap. We have had no downside gaps, one upside gap. The least amount of gaps we've had in a month this year is 10 on both sides of the equation. So pretty interesting. Now, let's put this basically in simple terms to show you what I think has been happening, right? So let's go back real quick to our all-time high, right? One time framed up 9 days, 9 weeks, market got too long. What happened? Week longs the next day flush out, shorts pile on at the end of the day. Next day, some of that short pressure gets alleviated. However, they try again that day, again fail, and close back there. On the 8th, same thing. We're 10 for 10 wide, and then towards the end of the day, they push, get nothing out of it. Next day, open up, alleviate the short pressure. On the 10th, we attempted to take out the previous day's high. SPY did. ES has a poor high. And didn't get any traction for it. Turns into a triple distribution day. Shorts push on Thursday. And then on Friday, again, they open towards the upper end of those last three ranges, try to alleviate the pressure from the shorts, get above the lower distribution for a little while, only to fail, never even take back the singles, come down, and what did they do again? They pushed until some of it was alleviated late on Friday. What's been played before affects what happens next, right? Plain and simple. Traders will do what's worked till it doesn't work anymore. Well, they keep trying to push it. Remember, we're also in a 4-day balance. 1, 2, 3, 4. Thursday's high is the high of it. Friday's low is the low of it, right? Balance rules will certainly apply. There's a lot of things that will apply today. Balance rules. The triple distribution day, trying to take it back, right? If single prints are to be taken back, it's usually late in the second day or the third day. Well, this is day 3, and they're attempting to take back at least the first set of single prints. This is short-term traders doing what they do on a consistent basis. So, again, all this is this morning are these shorts being relieved again as they're getting taken out to the woodshed. Now we'll see if they're able to continue. All right, destinations for this morning. Right now, I had the afternoon rally high from Friday. That's F's high of 335.86. So since there's still a little over an hour to go, you never know what could happen. We're still going to use that. If we open above it, that's gone. Then we have Friday's high of 336.97. We'll use it on both sides of the equation. Then we have the single prints. 336.98 get filled to 337.33. That's the first set from the 10th. The afternoon rally high, H's high of 339.60 from the 10th. And then the second set of single prints, 340.84 get filled to 341.20. And then the weekly high of 342.53. So not only are we in a 4-day balance, the balance high is the weekly high and the balance low is the weekly low. For the downside, if we gap higher, then we would use Friday's high of 336.97 to the upside. And then until we get more market-generated information, we have nothing, right? Now, I say that, but there is things. But as far as firm destinations, we need market-generated information. However, if you come back down and get accepted into M's range, you certainly know what's going to happen then. We'll trade M's range. POC was 8 wide. It's still fairly visible, although I like 9 wide. So if any acceptance comes into M's range, well, then again, you'll trade it certainly to the POC and then to the bottom of it. And then we have the weekly low of 331 and fill in the gap at 330.06, a 94-point gap from August 5th. Now, also on the upside, we have 338.57, which is our pre-market high, and 333.23, which is our pre-market low. So that's right around J's high from Friday. Okay, game plan for this morning. Well, depending on the gap, or if we gap, a lot of things have to be taken into account. If we're to gap within, say, 30 cents to $1, I'll be looking for a call play for a couple of reasons. the risk reward isn't bad. You would have filled this set of single prints, and then we see if we could at least get up into the middle of the second distribution where POC was and the afternoon rally high. That would be the destination. If the gap fills, I'm out on the call play. Now, in the next hour, if we were to open a lot higher, say around H's high, then I'll either wait to see if we get an inventory adjustment or even possibly take a short against H's high. Now, because the market's bad, but just to see if we come back in. We will have higher value at least to start the day. Those are two early plays. Again, I am live streaming this profile all day while giving play-by-play. $20 a month, folks. You can't ask for more than that. We're up to 170 now for $20 customers. Once I get to $2.99, that $20 price will be gone forever. It goes to $30. And I'll probably make the videos private at that point. So come and join now. $20 a month. You get a wealth of knowledge to help you become a better trader. And then quickly on the charts, I'm just going to show you the weekly and the daily. So we're one time framing down for 2 weeks, right? They're opening inside this week. Very important, right? It's plain and simple. We take out last Friday's low, you're going to go down to that 327, 330 level. If you're able to hold it, maybe we balance inside of last week's range. And on the daily, same thing. Here's your 4-day balance, which I just showed you on the profile. We held the 50, right? But one day doesn't make a market. So now they're attempting to hold it again, take out this daily high, and trade in the 4-day balance. Balance rules will apply. Good luck trading today. Have a great day, and we'll recap at 4 p.m.